Good morning, everyone. Welcome to RemaxHallmarkLive.com. Now, please welcome our Chief Operating Officer, Steve Tabrizi.
Good morning, Remax Hallmark. My name is Steve Tabrizi. For those of you that you don't know me, I'm the Chief Operating Officer with Remax Hallmark Group of Company. I'll do this podcast twice a year. Welcome to another episode of the Remax Hallmark Market Report. The title of this report this morning is The Greatest Uncertainty and the Greatest Opportunities. So we will delve in within the next basically 30 to 40 minutes to discuss what has happened in the last 6 months in our market and what we are expecting that will happen in the next 6 to 12 months in our market. After our session, we will have a time for Q&A. Shant, as always, will be supporting me through this process, and he will take down all your questions or read your questions, and I will do my best to answer any of your questions. So let's start. As I mentioned, so the title of this presentation is The Greatest Uncertainty and the Greatest Opportunity. Last 6 months has been definitely perhaps one of the most uncertain period of the real estate market in Canada and in particular in Ontario. So let's take a look at what are the emerging trends and their implication in the last 6 months. Obviously, prior to the last 6 months, the main focus for consumers was interest rate. But according to the multiple reports in the last 6 months, the biggest challenge for consumer as we're going forward is affordability crisis. And also uncertainty about the valuation of the value of the homes or any asset in real estate. There is also a capital scarcity in Ontario in particular, or in Canada is happening. The migration of the investors that maybe they are looking at the alternative option within the Canada or outside of the Canada. And of course, interest rate still is one of the hottest topics. So we will talk about each of these elements going forward. Perhaps we'll take a look at the first affordability crisis. So what's happening with the affordability crisis? In fact, the latest survey by Abacus Data in Canada shows that almost 57% of the consumers are giving up of becoming homeowners. 37% basically they're saying, I would rather not to buy a home and basically rent a home. And 20% also, they are pretty pessimistic about being able to buy a home. This is the first time that over 50% of the people are really negative about the home ownership due to the fact of the affordability. If you take a look at the household debt by the age factor, we'll see the younger generation, the generation that is basically below 40 years old in Canada, it's spending almost anywhere between about 70 to 80% of their financial assets or their household income towards servicing the debt and property tax and house maintenance. Versus in US, the same category of the age category of the people is sitting at almost about 60 to 65%. So almost 20% difference. So the challenge of the tightening supply versus the growing demand. In almost since 1990, this is the highest level of the affordability issues gap and barometer for the Canadian. Depending on where you live in Canada, perhaps in Ontario, probably one of the most expensive places in Canada, and Vancouver, the barometer is sitting at almost anywhere between the 97% to 130%. So that has caused many of Ontarians this question: do I want to live in the big cities like Toronto, or do I want to leave Canada? The good news is 45% of the Ontarian, they prefer to go somewhere else in Canada. So we don't see a major migration still going to US, but it is now a double digit. 15% of the Ontarian, they now prefer to go to US. 18%, which is a big number, jumped since last quarter, is almost going to Alberta because of the affordability, lower home prices, and also employment sector. So second point, seeking optimism in this uncertainty. There are so many things happening in the last 6 months that is really certainly confusing the consumers in the market. One of the first thing is unemployment rate in Canada versus US. So unemployment rate in Canada is now nudging at about 6.4%. In Toronto, it's almost sitting at a 7.8%, and in Ontario, it's about 7%, versus the US, because of the GDP and because of the economic growth, is a lot lower than Canada. So most of the jobs that we see that we have lost in a Canadian or Ontarian market are part-time job, or the job with the lower sort of wages. And the reason behind it is because of the pressure on the small businesses. Many small businesses are really suffering, and they have filed for bankruptcies. The rate of the bankruptcies in Ontario has increased drastically. The good news is that bigger employment sector is not suffering, and it's actually not creating a major job, but it's just basically on a pause pattern. So if we take a look at also another aspect of the uncertainty, and also which is really has caused a stress on consumers, the rental rate has grown up by almost 9.2% across Canada, versus the wages growth is only 5%. If you take a look at, for example, Toronto, you will see 8.3, and you see Vancouver is 8.1. And you see almost double digit in the cities that they are now more attracting immigrants or also residents that are moving to those cities, such as Ottawa, such as Victoria, such as Quebec City, and Waterloo. The cost of the living over there is low, and by default has created also an increase of the rental market because the demand is increasing in those markets. So on other matter, which is a good news. So when the market is create a lot of uncertainty and people are confused, you will hear the good news and the bad news. We notice the rate of the vacancies on shopping center and community neighborhood strip and power center are declining. The regional shopping center, which are basically the big mega malls, and we notice also it's flatlining. It's not actually increasing or is decreasing. So it shows us some sort of the stability in terms of the vacancy rate in the commercial sector. And that's the indicator of the stability in terms of the small businesses. Yes, we had earlier the first quarter of this year higher rate of the bankruptcies in terms of the small businesses or the businesses that they were going out because of the interest rate. Now, with 2 drop of the interest rate, we see a sort of a settlement of the market, and the market is basically responding in terms of the small businesses. The good news is you heard that basically Canada was on the G7 report that Canada for the next 24 to 48 months, it should be the leading country among the G7 countries in terms of the growth of the GDP. That's correct. And primarily it's because of the population growth. when you have a population growth, when you have a massive immigration influx of the people coming to Canada. So by default, even if you create not really a skill set employment, you create small jobs, even in the hospitalities and food sector. So you will see that the GDP will grow. So we are expecting, hopefully in the 2024, the GDP rate goes anywhere between 1.8 to 2%. And compared to the other countries, that we are basically outperforming the other countries. In terms of the employment rates, also we'll see an increase of the 1.3%, which that means it will decrease our unemployment rate, hopefully to sit around anywhere between 5.5 to 6%. So there was also a survey that was done by Angus Reid that asking the consumers, how do they feel about overall real estate market in Canada, which is very interesting. It's divided equally on the three segments. A lot of people, almost 3.61% of the 10 respond that they basically feel that it's an excellent opportunity to sell, and 3.49 they feel that it's excellent opportunity to buy, and almost 1/3 also feel maybe it's a time to just hold and watch the market. So we talk about the capital scarcity. What is happening in Ontario in particular, and why we are lagging in terms of the GDP, both in Ontario and in Canada? It's just basically a scarcity of the capital. What is the capital? When the capital is not flowing into any economy, and when the investor, doesn't matter domestic or foreigners, are scared to invest in any type of activity of the business, to create the capital scarcity. Therefore, those companies or those investors, they look at their multiple option. And why they feel that way, again, is the lagging of the GDP. The Canadian GDP primarily is focused on housing and population surge, versus many of the capital investors are looking at a better and healthier rate of return and more sustainable, less fluctuation and less volatility. If you take a look at the US primarily their growth is on a fixed rate mortgages and fiscal stimulus package because it's the election year and oil and gas production. And Canada primarily focused on housing and population surge. As we discussed, hopefully within the 2024 and 2025, we'll see the GDP, Canadian GDP will be anywhere between 1 and 2%. The 2% GDP or 1% GDP is not the greatest GDP that you would expect from a really healthy G7 economy, and is one of the most thriving population growth among the G7 countries. So Ontario, no matter what, it just stays dynamic and attractive for a variety of the reasons. Number one reason, population growth. Majority of the immigrants that are coming to Canada are basically settling in Ontario, primarily because of the employment hub of Canada is Ontario. There is healthy competition for businesses that they want to try in Ontario, and the real estate market in Ontario, due to the variety of the reasons, could be commercial, could be multifamily and industrial, and hub of the logistic services and transportation is also very diverse. But also Ontario does have economic volatility because it relies heavily on population growth and immigration, and also the dependence of the Ontario to the US market. So as of the January of the 2024, everybody talks about the supply and the demand. The last year, the provincial government and federal government, they announced a plan that they want the municipalities, they have a quota that they basically meet the target of the building housing starts. So almost 25% of these municipalities, they met their target. 75% of the municipalities, if you take a look at this bar going forward, cities such as Barrie, such as Ottawa, such as Oakville, they have failed to meet the target by the provincial and federal government. It basically shows another lack of the growth in terms of the housing, and also it shows that basically we are not meeting the target for the houses that we need in the market. So purpose-built rental vacancy and new supplies. So if you take a look at the new supplies with the purpose built, you will see that basically the new supply is dropping by almost drastically, and we are not being able to basically build the new purpose supplies to. Both of these factors, not meeting the target and purpose-built supply, it caused the increased demand on limited supply. Therefore, it caused not the drop of the prices in the market, it's actually caused, again, further growth of the prices on the market. So what is happening with the investor cycle in the Ontario's economy? Because of the office market in particular is been under the pressure due after the COVID, due to the hybrid model, we have seen many of the institutional investor and REITs, they are converting their office towers to residential. They see better rate of return with the residential. Almost 60% of those office towers are converting to the residential, and you see the biggest sector after that is industrial, and then you go to education and hotel. So another good news, which shows the demand is going to be high in Ontario, the share of the construction worker in new immigrants by provinces is lacking. It's been a topic of the immigration policy, that why we are not bringing the skilled workers that are related to the issues with the housing. One of the related issues with the housing is how can we build more homes faster and meet the quota when we have only about 2% of the immigrants that are coming to Canada or Ontario are in the construction sector. So therefore, this is going to be one of the mandates that basically the provincial government and federal government must adopt in order to at least help to alleviate the pressure from the supplies issues. So if you recall, the CMHC and the Canadian government and the provincial government, they talk about how many homes they need. As of this month, we are still under the supply. We need almost about 1 point in Ontario, 1.5 home, and housing completion at the current trajectory, it's only about 500,000 by 2030. So therefore, as we go further, based on the immigration also influx that we are increasing on a yearly basis, this number of the 1.5 million, still we're going to be in the negative territory. So we hardly going to meet the target or the quota that the provincial government was hoping that we, and within the 10 years, we can be able to basically have a balance of the supply demand. This number will increase drastically as we go forward. So what is happening in Ontario, what Ontario needs to do in order to have a more robust economy and also making sure that we're not a target is basically cutting the red tape on the trade barriers, utilizing the immigration skills and improving tax competitiveness.
Bear with us, folks. We're just going to fix the technical issue.
Sorry, guys. Some technical difficulties always. Computer. I'm glad that I have that on my side. I can't hear background noise, but there's some background. So let's focus on what Ontario needs to do. So Ontario really needs to cut the red tape to the trade there. You know, we do have the ability to bring the immigrants and skilled workers construction to focus more on utilizing the skill set that the immigration policy needs to be done, and who do we need to basically for Ontario in order to help the economy, in particular the housing sector. It's not only also about the housing sector, we need to focus also in other investment sector that we need to do. The skill set immigrants are the quality of the immigrants that we need to really bring. Capital gain tax, latest announcement, are not making us competitive. And that's a sad part. The investor capital scarcity that has caused among the foreign investor and even Canadian companies' investment is all because of the tax burden that has been created in the market. So we need to improve the tax competitiveness. So let's focus on also interest rate and market performance. Sorry, guys. So interest rate and the market performance. Last 6 months has been really positive or negative or uncertainty in terms of how the market has performed. So Remax Hallmark operate across multiple regions, and therefore we have a really good pulse of what is happening in the market. So the market from a big city such as Toronto to Ottawa to also the suburb area such as Simcoe and Durham and also Peterborough, which is the new addition to our market. So let's take a look at the GTA market performance. Yes, the number of the sales and transaction, if you take a look at the last 3 years performance in terms of month-to-month and comparison has dropped. But if you take a look at the month of June, you will see, yes, compared to 2023 has dropped, but it's really almost in line with the 2022, the same in the month of the May and April. We had a very good start of the spring market or the first quarter of this year, but then we lagged on the second quarter. If you take a look at also the active listing, currently almost 43% of the market is the inventory is the condos, and almost about 56% of the market is freehold, which is the semis, detached, and townhomes. But you got to remember the active listing is not a great measure by the Toronto Real Estate Board because the cancellation and relist also count. So the numbers is not, perhaps it should be corrected by almost about 10 or 15%. The month of inventory, surprisingly, everybody in the media reports that there is 7 or 8 months of the inventory in a condo market. At the moment, all type of the property, the inventory is sitting anywhere between 3 to 3.5%. When they talk about the 7 months of the inventory of the condo market, that's a combination of the pre-con or new homes or new condominium that they have not taken the occupancy or the title registers and the MLS. Average days on the market, it's really steady and has increased maybe slightly, sitting at about 20 days. So when you go back also the average inventory anywhere between 3 or 4, we are in slightly seller market, but a balanced market. Overall, yes, in a condo market, we may be in the buyer market. Prices, this is the best part. Prices, they have hold, and the resiliency of the prices that they haven't dropped, it's amazing. It demonstrates that basically the fundamental capability and financial ability of the homeowner in Canada and Ontario. We haven't seen a major drop in any of the prices across Canada and Ontario. So if you take a look at the Ottawa market, let's take a look at the unit sales in 2024 combination of the everything versus the 2023. In fact, you see the market in Ottawa in terms of the unit sales, it has increased. And one of the reasons is Ottawa is an attractive city, and in terms of the affordability, so we have seen a major migration of the consumers from the big cities such as the Toronto towards the Ottawa. We have seen the Ottawa prices also compared to 2022, yes, has dropped, but compared to 2023 has a small increase of perhaps probably about maybe 3% or 2%. We see also within the condo market, the prices has increased in Ottawa market. If you take a look at the Peterborough market compared to 2023, the sales has dropped primarily because of the cottage country. As you notice, during the pandemic with the low interest rate, historical low interest rate, many people bought cottages, and now they are realizing that they are not using those cottages or recreational facilities, and they are offloading them off the market. That has caused the decrease of the sales transaction. But the prices had a small increase even in the Peterborough market, despite the higher interest rate. In Simcoe County, we see the increase of the prices from 835,000 to about 841,000, and we'll see the trajectory of the upwards prices. Simcoe, because of the proximity to Toronto and connection through the Highway 400, and also GO Train, is also becoming one of the most attractive places in terms of the consumers that they are moving up to Simcoe County. If you take a look at the overall GTA market, why we compare the GTA market is really a big sort of a comparison for the Canadian real estate market. If you take a look at the current year versus the previous year, you will see also the number of the transaction, both on a freehold and a condo market. We'll see only actually the condo minus drop of the 3%, but we will see also an increase in a freehold. So we'll see overall is a positive 3%. You will see the prices, it's only had a drop of the 2.49%. If you're comparing sector by sector, and sold to the ask price is almost sitting at the 100% list price that everything is selling. Canadian market performance overall everywhere, with exception of the Montreal, is green. Even Montreal is a 0.1%, which is really nothing to worry about it. You will see Ottawa had an increase of the 1.1, and the Greater Toronto is 1.3. Pretty much across the country, with exception of the maybe Calgary and maybe Edmonton, slightly higher, we'll see 1% increase in all the prices across the country. So then what is the uncertainty? What is the crisis? Is there a crisis or is there opportunity? So one of the biggest topic on the news is pre-construction. So yes, pre-construction market, particularly in the large cities such as Toronto, or less in Vancouver, are maybe under distress. And why? So what happened by the end of 2023, we had one of the lowest sales in terms of the pre-construction. We basically managed to sell about 12,716 units of the new condos in GTA. At the same time, whatever was basically pre-sold in the era of the 2017, 18, and 19 got ready basically in 2019 and 2020. And we had a massive inventory of almost 40,000 new condos that they got ready. So you had the lowest sales, and you had a really massive occupancy rate that is coming to the market. The occupancy rate that coming to the market also faced a couple of challenges. One of the first challenges that they faced was interest rate. Once you have a higher interest rate, your occupancy fee increased drastically. When your occupancy fee increased drastically, so some of the speculative buyers that they were basically not long-term investor, that they bought these condominiums just simply to flip the papers, they faced this challenge of the occupancy fee. The occupancy fee of the one-bedroom condominium for 500 or 600 square feet, which was about $2,500, due to the increase of the interest rate from the 2% to almost 6%, was sitting at about $5,000 or $6,000 now. And you have also massive of those inventory that coming to the market when they couldn't offload them, so they were sitting on the shelf. But nobody pay attention what happened in this time of the market in terms of to the pre-con and the resale. If you take a look at the condo market in terms of the resale since 2022, it's really been, the prices are been flatline, versus the pre-con prices went through the roof. And when the market now is saturated with a higher inventory, consumers are asking themselves this question: do I want to buy a pre-con 600 square feet condo in the city of Toronto, which was selling at anywhere between about $1,500 to $1,700 for almost about $800 to $1 million, depending on the location? Or should I buy a resale one? Could be less than 10 years, could be a 10 years for about $1,000 or $1,100 per square foot. That's really did cause the confusion and uncertainty in the market. Because of the higher inventory And because of the many of these investors, they had to close or take the occupancy, they face now a negative cash flow. If you take a look at almost about 81%, almost if you do a cumulative of all the categories, depending on the size of the condo, almost 81% of the condos that they came for occupancy, they have a negative cash flow. Yes, we had a 9.2% increase in the rental market, but the cost of carrying these condos, it's really a lot higher than the increase of the rental market rate. And you have to add also the property tax, you have to add also the maintenance to it. Another burden that the pre-con buyers or investors they faced was the evaluation. So banks, they took a different position. They went through the route of the conservative. The Canadian banks are always conservative, that they will take a less risk when the market changes. And that's one of the positive factors that the Canadian economy or Canadian housing has managed for years to really not go to a recessionary mode compared to the American, because the conservative banks and the lending practice in Canada is regulated. So a bank that was basically gave appraisal for a new condo 4 years ago at $500,000, majority of the bank are now taking almost about a 10% to 15% reduce on the cost of these condominiums, particularly the pre-con, not the resale. So, and that's what happened now to launches and new project that they are in the market. So you got project in the market that they launched last year, particularly from September of the last year to the December, and almost about 50 projects. And they basically couldn't meet the threshold of the selling anywhere between 50 to 70% to get the qualification for loan from the bank to basically break the grounds. You got the condo sales, pre-sales market is down by almost anywhere between 40 to 60%, depending on the location. And you got 70 to 75 projects right now in GTA. Basically, they said we're not launching this year. So a lot of people, they think, oh my God, so the condo market is in a disaster shape. Yes and no. Yes, it is in the bad shape right now for perhaps the last 3 months and going forward for the next 12 months. Well, what is happening right now is a smart move by the developer. They are not launching the projects. So what we need to do, we need to clean up the inventory that we have right now. We have an inventory of the ready units for occupancy. And we have also some projects that they have sold anywhere between 20 to 25% that they are very slowly selling and going forward. So eventually in the next 12 to 15 months, with more drop in the interest rate, and because we already talk about the affordability issues, the condo market, it is attractive because it's a point of entry. We are already seeing the movement in the MLS sector in terms of the condo market that we can see in 2024. The purchase of the condo market is actually increasing. It's not dropping because consumers, they have the confidence in terms of the interest rate. The first drop of the interest rate, it was sort of the light at the end of the tunnel. But the second drop of the interest rate, it's not going to basically create a market really go crazy. But what's going to do, the consumers now firmly believe that we are on the trajectory of the downwards and the dropping of the prices. So this is the opportunity for a purchaser that they want to enter to the market and negotiate, or they want to buy an assignment unit that basically a purchaser maybe 3 years ago paid $1,500 per square foot, and now they can grab it at $1,100, plus some incentive from also the assignors. Also, in addition to that, the developers, they have focus unit, that what they call. In the last few weeks, we had several meetings with the large developers such as Green Park, Minto, Tridel, Menkes, and also the players in the market, the listing brokerages in the market such as Baker, that they are all heavily focused on the units that they really want to offload with the massive incentives such as the deposit structure, such as several years of the no maintenance fee, or also rental guarantees and the rate of return for investor. So focus on these opportunities, because these opportunities are going to be only for a limited time, maybe maximum another next 12 months. So what's happening with the immigration? So where people are moving? I'm pleased to share that the Barrie, Ontario is basically the #1 fastest growing community. A lot of people are moving. 3.1% of the population are moving to Barrie, Ontario, where we are actually also have several offices there. With the other areas are London, Oshawa, and you can see Toronto still is one of the places that the consumers are by 2.1% are moving there. So is Canada still safe haven or is the safe haven status in jeopardy? Because of the taxes policies and because of this affordability issues that we have, we're seeing that the private sector and the capital is really moving to a different part of the North America. Majority of it is moved to the US. This is not good for Ontario. This is not good for Canada. So I had to share this slide with you. It's to some degree, it's a negative news, but to some degree also you have to realize what cycle we are going through. The cycle of the immigration always caused this. We have the cycle of the immigration every 5 to 10 years. We bring the newcomers, the new immigrant. They built a beautiful life here. They take advantage of opportunities that Canada presented themselves. And if they act smart and they invest in the variety of the businesses, they will grow their business. And by default, some of them, they will have the trajectory of the capital going somewhere else. But we don't want to lose major capital investment in Canada, because that's not good for the Canadian economy or Ontario economy. Still, Canada, due to its geopolitical position and due to its neutral position in terms of the political challenges that does exist across the global market, it's a safe haven. And a lot of people feel very comfortable for a variety of the reasons come to Canada. Could be for education of their children, could be for investment, could be for status that they receive in Canada, and opportunities that receive in Canada. So what is on the mind of the consumers right now? Of course, prices. In the last 6 months, earlier this year, the interest rate was in their mind, but now they are convinced that the interest rate is in the downward trajectory. And the second issue that they have in mind, where to move. I have said this statement multiple times. I have probably said this one for the first time 15 years ago. And I said the large cities in Canada, such as Toronto, Vancouver, and Montreal, they will end up to be one day that not the place for everyone that can afford to be there. It's a good news, and it's some people, they think it's a bad news. To my opinion, it's a good news because we're spreading the wealth across different cities and the smaller suburb areas, such as Barrie, such as look at Ottawa. Ottawa in the last 8-9 years, from a city that was below 1 million people population is now over 1 million population and is thriving and going forward. And we will see the same trajectory happen to the areas such as Peterborough. We will look at also Durham. Durham in the last 10 years, the average price in Durham from $400,000 to $500,000 is up now to $900,000 because has really taken advantage of the opportunities of the business investment, transportation, also housing. So consumers also, they're also considering, okay, when the prices may drop. Is it the best time and opportunity to buy a home now, or should they wait? I can with certainty share with you that the prices will not drop. And if the prices doesn't get worse, I won't be surprised. But you have the opportunity in a very limited sector right now to take advantage of it. And the limited sectors start with the pre-construction assignment and or buying the properties in the suburb before what I would refer to as the madnesses start maybe in about probably 12 to 15 months from now. Prices are absolutely related to the interest rate in our housing market because the interest rate will give the confidence and also it will increase the affordability ratio for the home buying purchases power. So we know in September 4th, I'm confident, I will predict now for September 4th, there will be another drop because also there is a news that coming from the US that US will have their first announcement of the drop in the coming weeks. Bank of Canada also realizes that the Canadian economy is lagging when the GDP is growing at 0.7 to 1%. It's not healthy for our economy. Therefore, they need to stimulus the market. The stimulus of the market used to be done by quantitative measure by federal government injecting cash into the economy, but it's gone. And now it's time to basically reduce the interest rate and give the confidence to the businesses and the consumers to spend the money. And one of the spending money sector is obviously the home purchases. So the Bank of Canada will continue to drop the rate. We are projecting probably by 2025, the bank rate will go sitting anywhere between 3 to 3.5%. So if you want to also understand your company, where you are associated, Hallmark versus market performance, we take a look at the two sector of the market, the GTA, MLS. For privacy reason, we had to basically remove the other companies in the market because this stats is through the membership of the certain software and platform. We are not allowed to share all the details of the other companies. But Remax Hallmark, in terms of performance of the GTA on MLS, is sitting as number one. Congratulations to all of you. The market, the total firms in the GTA of MLS, and if you understand after the amalgamation of the Toronto Real Estate Board and bringing many other small boards, this is a really quite achievement. The market is actually performing at 4.42%. It's not in a negative market, and we are maybe by 1% off the market. So Remax Hallmark still is leading, and as you can see, some other companies are in negative territory. In Simcoe County, the market is actually, or firms that are operating in the market are minus 17%, and we are only minus 11%. So we are outperforming the market, even in the submarkets such as Simcoe. So the best bet to invest, still industrial real estate, multifamily residential, and condo assignment. If you want to take a look at the industrial assignment, you will see that it's the vacancy rate or availability rate is going up by 4.2%. It's basically, we'll see the more demand for industrial unit due to the variety of the reason, downsizing of the retail sector, and a lot of people are using the industrial units for logistic planning. Multifamily residential is due to the affordability. It's really a hot topic in any investor minds. Many investors, particularly the one that they were really focused heavily, what I will call them the professional investor, that they were buying multiple units of the condominium, they are actually now shifting their minds towards multifamily residential. And they keep in mind, they are now switching from a short-term speculative attitude to long-term attitude. Because if you take a look at the home ownership cost, and if you take a look at also median household income and versus a two-bedroom monthly rate, there is a huge gap. That's why the multi-family residential and multi-units across Ontario will be a thriving asset to invest and to tap in. So what is the Canadian economy's biggest challenge? Everybody talks about the GDP. So what is the GDP? GDP is basically productivity of the labor and output. If you take a look at it in the last, probably, I would say 20 years, it's been hovering around 2.5, and it keeps decreasing. This is not good for Canada, because you want to have a GDP of the over 3% to 3 to 4% in terms of the basically the output of the from the labors and the productivity, which basically increase the standard of the life. And why the Canadian economy, it's really struggling always to hold its GDP anywhere between the ratio of the, I would say 2.4 or maybe 2.5%. And one of the reason is basically we are not investing enough in businesses. The Canadian government and federal government announced almost $6 billion injection of the fund into the housing. It's great. We need the housing in order to create affordability and create more supply, because the demand, we cannot stop the demand. Immigration policies, they're going to be here for years to come. Well, we need to, of course, to focus on quality of the immigration and the skills that we need for Canada. But look at why we are not investing in enhancing the business asset. If the business investment declined in asset categories such as transportation, hospital, and the investment in these categories, they basically go somewhere else, the output for a Canadian living standard will drop. If you want to take a look at it, how even the Canadian investment funds, such as the pension fund, why they are investing more abroad, less in Canada, because they will see more diversification and more rate of return in other market because they are more business friendly. So Canadian government needs to reduce its regulatory burden on the businesses and make it more attractive, particularly for small to medium-sized entrepreneur, because that's how the Canadian economy's business sector is built. Government also, this is a very hot, very sensitive topic. We need to opt in less regulation. We need to allow the foreign investment in terms of the large investment to come to the Canadian economy, including telecommunication, banking, and transportation. Our economy has changed its dynamic from what it was. Regulation is good, but too much regulation, the way we have it, it has blocked us and it has made us less attractive for the large firm to invest in Canada. These large firms, yes, they invest in the portfolio of fund asset management with the REIT companies, but majority of these companies, they like to be in control of their asset. When they cannot be in control of their asset because of the regulation, they will take their money somewhere else and invest. And if you take a look at the countries around the globe, such as Germany, such as US, when you see the foreign large investment companies that they go there and they invest in the banking, in telecommunication, in transportation, in infrastructure, you will see their economy is thriving, and also they create job. When you create investment in money business, you create job. If you only throw the money into the housing because you want to build the house and inject, you basically are taking the Canadian saving in a long run and just basically injecting it to one sector of the economy. Does that economy have a great output in terms of the living standard for Canadian? No, living standard is not only by the housing measure, is measured by so many other elements, such as the transportation, such as the health system. So this is my last piece. The housing crisis was caused by politics. It will get worse by politics, and it will continue not to work because of the politics. I firmly believe in this statement, and they cannot fix it. They talk about that we need within the next 10 years to build 180,000 homes, at least in Ontario, 310,000 homes in Canada. And the maximum that we've been able to build was about 105,000 homes. When we don't have the skilled worker, when 2% of our immigrants are focused or brought into the construction industry, when the average age of the retirement in the construction industry now is edging about 60 years old, how could we meet those requirements? How could we basically build affordable housing or meet the quota of the supply and demand when the investment and capital scarcity is leaving Canada and we are not really opening the door? Is it a doom and gloom? No, it's not doom and gloom. Canada benefited with one element, that's immigration. And that immigration, it's a cycle. I've been doing this for almost 28 years. I have seen it. So the cycle will continue, and we will bring 1 million to 1.2 million people. Actually, the cycle has increased. We used to bring 300 to 500,000 immigrants. Now we have added the category of the work permit and massive increase of the student visa. So the category will continue to come into the Canada, and the cycle of the every 5 years, we will see this roller coaster. And every 5 years, we'll see the politician, doesn't matter what color they wear, they will make certain announcement and they will make a certain policies, which is a temporary bandage. So I mean, in a conclusion, what I'd like to share with you is basically the market will be back to the normal course, and be ready. The market, perhaps by fall of the next year, will start picking up the momentum. If we drop the rate in September, which I'm convinced we will, and if we could do one more in December, you will see we will have a strong spring. And if we don't drop 2 further time this year, and we drop only one, and the next one in the spring of the 2025, you will see the market start to rebounding in 2025. The pre-con developers, they are all getting ready to launch their new products by fall of 2025 or early 2026. And guess what's going to happen again? we will go through the same madness of the increase of the prices of the pre-con, because now they are taking advantage of the lack of the supply, because we clean up the supply. So take advantage of the opportunities that does exist in the market. Remax, Hallmark, and associate, you as a realtor, we are doing a fantastic job maintaining the steadiness of the market. The market is balanced. The market is not in recession. And once again, the Canadian politician, I should give them this credit, and the regulatory, such as the Bank of Canada, they have managed to have a soft landing for our market. So despite the fact of all the changes of the interest rate, the soft landing really helped us. Thank you very much for listening to me. And again, apology for interruption in the middle of the presentation due to some technical difficulty. I'm here to answer any of your questions.
Thank you, Steve. All right, we have a couple of questions. First one's from David Brown, and he's asking, Steve, we are still seeing prices defy gravity. When inventory was scarce, it made sense. Now that sales have slowed and inventory has risen, will we see prices fall to improve affordability, or will the Bank of Canada drops be even to stimulate sales and drive demand and increase in prices?
Very good question. So we are in a pattern of the uncertainty, David. So consumers, we have two types of clients in this market. We got the buyers, we got the sellers. So some sellers are now facing the pressure, particularly in 2026 with the mortgage renewal of the, they were really concerned coming to 2026 because the 5 years term from 2020, let's call it 2021, for renewal, but there are less pressure on them. But we have to acknowledge there is a small sector of the market, 10% of the sellers, they really stretch themselves beyond their means and beyond their income. So it's a pattern. You will see a drop in the prices by the seller and small increased activities by the buyer taking advantage of the market. But in the long run, and the long run, I'm talking about 12 to 15 months, you will see the market change its course again. The Bank of Canada, for sure, it's acknowledging that it's basically they have no excuse. The excuse was inflation. The inflation is really smoothly going down towards the 2% mark, which even the Bank of Canada now, listen, the weighted average on the housing, which is supposed to be 25% of the inflation, is sitting at 33%. It was really an extra measure for the Canadian market. The inflation is sitting at 1.5. It's not even 2. It's below even the target. So the Bank of Canada is going to continue to drop off the market. The one thing that happened in this change, everybody should pay attention. There is an education for investor in this cycle. Do I want to go back to be investing in a pre-con market? Do I want to be reckless in terms of the investment? Can I bank and always the interest rate to be low? So this was a wake-up call for Canadian consumers that be more savvy, more understanding how the market dynamic works. But also people are asking, okay, if the pre-con is a wake-up call, particularly for everyone, does the developer are going to drop their prices? They want to drop their prices, but they can't because of the cost of the construction, because of the taxes, because of the burden that the provincial and federal governments levy on them. So answer to your question is, we're going to have a short period of the drop from the seller side, and the buyers will be happy, and then we will turn around back. Remember, the message for your seller, you sell low, you buy low. For your buyer is the same thing. Don't wait till the market pick up the momentum. I can tell you with the certainty, you will wake up one day next year, you say, what happened to the market? Why market activity has picked up so much? Right now, we are in that pattern of the cleaning up the inventory. The inventory on a freehold is not that bad. It's sitting at about 14,000 homes in the biggest board, which is the TREB board. That condo inventory is really causing a negative impression for even the freehold. So once we clean up that 10,400 units of the MLS and 25,000 of the pre-con that is in the market, then you will see the equation will change.
Next question is from Luke Woolsey. Do you expect the upcoming elections to have a significant impact on the market, US or Canada?
Election is always good. US election, particularly, would create optimism. So when they create optimism, the candidate, they make promises, and promises they have to fulfill at least on the first 100 days of when they are elected to do something about it, even if it's just a press releases or announcement. Overall, yes, it will be good. Election for Canada, it's needed because the current party is really has caused some damages for the Canadian economy, in particular the capital scarcity. Canada was always well known for attracting foreign investors, even if they were not in control of their assets. Now, the question of the controlling their asset because of the implication of the more taxes, it's really, they're wondering, do I want to invest in Canada? So we need a more friendly government. This is not a political debate. Conservative are always more business savvy versus the liberal. So I look forward for conservative to be at the House. And then we can have more in two areas. We can have more business savvy government. Second, we can focus at what skill set of immigrants that we need to bring to the country. We need skill set of the immigrant in every arenas of our industry, from the health sector to infrastructure to business, and in particular in Ontario. Ontario, it's really, as I said, is dynamic and attractive. We just need a set of the better policies happening for Ontario.
Excellent. Next question is from Warren. What can I advise my clients about in terms of the downtown condo market?
If they can afford to buy. Guys, it's very simple. If you're thinking that the condo market in the city of Toronto is going to go back to the days of the $600 or $700 per square foot from a $1,500 to $2,000 per square foot, dream on. It's never going to happen. It's not going to happen. Even if the government wants to make it happen, it won't happen. If the government wants to make it happen, provincial or federal, that means they got to lift up all their tax burden, all their levies, all their charges against the developer, which they can. That's the income for the city of Toronto. That's the income for the province of the Ontario. So they won't. A cost of a building, a condominium, a cost, land cost, with all the adjustment, with the material accessibility right now, which is really fine, and the construction crews or construction companies are actually now looking for jobs rather than being on demand 2 years ago, is still sitting around about $900, $850 per square foot, depending on the where, 905 or 416, or it could be in Ottawa area. So the profit margin, when you see right now an assignment condo, it goes for $1,000. When they bought it for $1,500, is an opportunity. So you have to take advantage. So Warren, the message to your clients is take a look at the resale, take a look at the opportunity of the pre-con assignment in the market. So you can see the building, you can go view the building, and then take advantage of it. If you are in the market for a long run, you're never going to lose money. This is my message to you. Real estate doesn't matter. In Canada, in most thriving economies among the G7 countries, if you're in a long term, you don't lose. If you are in a short term, you better make sure that you do the timing right. And that's what happened in a pre-con market. In a span of 2 years, the market turned from being line up at the sales center to now the developer are basically willing to throw you red carpet to buy one of their units. So just a timing matter. But if you're on a long trajectory, so you do it. When do you buy any asset in real estate? When that asset is distressed. So that's the opportunity right now, Warren.
Thanks, Steve. And I have one final question from Angela Schutz. She's asking, can you touch on the rental market?
Well, rental market affordability. So it's a little bit easy because now we have more product from the investor groups is in the market. But affordability, when the wages growth has been about 5%. And if you want to take a look at why the rental market is going to be healthy, we talked about this in the last episode. We said the Canadian market from a home ownership of the 70% to 30% rental is shifting, becoming a European market. In Europe, 40% of the market is home ownership, 60% is a rental, because not everybody can afford to buy a home. The cost of the homes in Europe are typically in correlation to their income is expensive. The average household income in Europe is quite low. Everybody thinks a Europe lifestyle, they should have a higher income. No, European, they make a lot less money than the North American household. So even with the shift of the market, even with the correction of the prices, okay, in the city of Toronto, in Ottawa, in Simcoe, when you have an average price of all category of the home anywhere between about 750 to $1.2 million. So in order for you to have a 10% down or 20% down, and when your household income is sitting at about $120,000 pre-tax, by the time you take the tax, so how long does it take you to make the saving of the 10 to 20%? A company did it a few years ago. It's almost 20, in some cases up to almost 50 years to make the saving. Therefore, when you saw at the beginning of my presentation, 37%, they said, forget it. I'd rather be a rental. 21%, they said, I'm not optimistic about becoming a homeowner. Plus also COVID, Angela, really created a different mindset and culture among the consumers. Consumers are asking themselves, the quality of the life that I need to have. Younger generation in particular, they will not sacrifice the quality of their life for mortgage payment, the same way that the baby boomer, other generation of the Canadian, they were so proud of the home ownership. Younger generation, they would rather have the balance of the quality of their life, and they pay the rent. So the rental market, it's going to be very healthy, and it's going to go even higher. And one thing about the investor group that they are entering on multifamily residential to rental market is very simple. They are saying, okay, I better set the rent rate high because the landlord tenant tribunal and the bylaws are not in my favor. I set it high at the beginning so I don't have to really go an adjustment rate there. Therefore, it's not really helping to reducing the rent too. I guess no more question. Thank you very much for listening to me, and we will upload the presentation through our hub. Not today, because we got to make some edit because of the technical difficulties that we had there. And thank you very much, and have a wonderful day. Reach out to any of leadership team if you have any question regarding the market. More than happy to answer any of your call. If you want to call me, my cell phone number is 416-561-9111. We'd love to have a chat with any of you in terms of the market or any other concern or issues that you may have in terms of your business. Have a wonderful day.